Hello, I'm George Abernathy, the proud president of FreightWaves. Welcome to Supply Chain Spotlight. Today, I'm really pleased to be joined by Mark Manduca. Mark is the Chief Investment Officer of GXO Logistics. Now, I know that every single one of you who's viewing this knows who XPO is, and almost all of you know who GXO is and will become here in the near term. But I'm really excited that Mark, in his role as the Chief Investment Officer, will be able to describe what's happening in the real near term with regards to GXO and how soon we can expect the kind of performance out of the company that we expect to do. Mark, thanks for doing this.
Hey, thank you, George. Thanks so much for the time today.
So, Mark, let's set the table a little bit. It's interesting, as I describe, most of the folks, almost everybody's going to know about XPO, and with what's been shared out, and you've been very visible out in the market around GXO, what's coming with GXO. But it's amazing to think that what's being launched is going to be, I want to make sure I get this right, the second largest global contract logistics provider. So speak to the launch, if you will, and just talk about how this, how GXO is going to be presenting itself to the marketplace.
Well, you opened up, George, with your point about the spin. So this is a business that will be spinning out of XPO in the third quarter of this year. And in essence, there are many reasons for doing lots of spins, but with us, I think each company will have a more attractively valued pure play equity currency to attract talent and to engage in accretive strategic transactions going forward once the spin is complete. Each company will be able to tailor their capital structure, in essence, and capital allocation to their own strategic priorities. That's the key of the spin. Naturally, with any spin, of course, you would expect the individual shareholders to benefit as well. Ultimately, by unlocking trapped equity value here. And to be precise, we would expect each business to trade at a sharp premium to XPO's current multiple. So that's the spin element. When it comes to the business element, our business is remarkably simple, and yet we provide solutions for some very complex problems. This is a business that is about 900 warehouses with 100,000 teammates across a variety of different regions in the world. We're a global company, as you mentioned, and we are, I would like to put it, the largest pure play contract logistics provider. Yes, the number 2 in conglomerate terms, but the largest pure play logistics provider. And when it comes to thinking about our business, what do we do best? Well, if life is about trying to spot what you're best at, I think that it's easy for us to say that, in my view at least, we are best in class at stacking very complex supply chain solutions for our customers, and we do it with precision and at speed. We manage what's inside the warehouse in essence, George.
So, Mark, as you mentioned, 2 words that over the last year and a quarter or so were said more often by many who really don't understand it than they were ever said before, and those 2 words are supply chain. And some of the folks have seen me say, if you had a drinking game where if you heard supply chain mentioned on the news by someone who didn't know what they were talking about, you'd probably get drunk relatively quickly. But what impact that GXO is going to launch, spin out with in the supply chain, and where you see this global impact happening, it's happening at exactly the right time, which has to be part of the reason that it's spinning when it does. Does that make sense?
Completely. Supply chains have become incredibly complex around the world. That phone in your pocket, for example, if you imagine where it was manufactured, it's been manufactured across 43 different countries. And as we've gone through a pandemic, as you'll know, if one piece of that chain breaks, say, for example, if a plant or a manufacturing facility or a warehouse was to catch COVID, then the whole chain breaks. The importance of having robust supply chains for any global company is absolutely paramount, top of the list of things to do. Let me explain it to you. When a customer moves to GXO, it's not only making a cost decision, it's actually making a revenue decision. What I mean by that is logistics represents a small percentage, call it 2 or 3% of any one particular customer's revenue. But if you pick the wrong provider to manage your supply chain, it actually affects 100% of your revenue, not just 3% of your costs. So 100% of your revenues can suffer if you get the wrong provider here, the wrong third-party logistics provider. And that's why customers demand, in my view, best in class. That's why they demand a scalable provider. And that's where we come through.
As you talk about best in class and how your customers are asking that from you, how do you see, and one of your roles is going to be reviewing opportunities, how do you see the momentum? How do you see your pipeline around both new customers and the customer expansion that will come GXO's way as the global economies start to open back up again?
So in terms of the TAM, the addressable market, let's say, there is an almost endless opportunity here. Let me contextualize it. The business is centered around 3 major secular tailwinds: e-commerce, automation, and outsourcing. When it comes to e-commerce, if you look at penetration rates across the European and North American market, you broadly see around 20 to 30% penetration, depending on which country you look at. Now, we've built a leading position in e-commerce with about 40% of our revenues coming from omni-channel retail and e-com specifically. And I don't think there's much debate. E-commerce is clearly substantially outgrowing the broader economy, and that benefits our customers and that benefits us. And our presence, I think, will continue to grow as, of course, you see e-commerce continuing to win market share from brick and mortar retail. So that's the e-com element, very early days. Automation, even more nascent. Warehouses are obviously becoming more and more automated, as we know, and that's for efficiency, that's for speed, that's for safety, and that's effectively transforming the logistics industry. And it's really just getting started. If you think about automation across the entire industry right now, when it looks at warehouses, you can basically say that warehouses are automated by about 5 to 6% across the entire industry. Now, clearly, we outperform that percentage number, but the industry still has a lot of runway to grow when it comes to automation. And then finally, I think the most important trend, and it's linked, it's outsourcing. And that is 70% of all global supply chains are still yet to be outsourced. And so therefore, when you say to me, George, what's the addressable market? Well, the addressable market is the outsourced market, which is representative of around $130 billion. But it's also the in-house market, the market that is still yet to be outsourced. And that's potentially another $300 billion on top. So the opportunity here is potentially as much as a $430 billion opportunity. When you talk about new versus old customers, it's a mix. It's a mix of both the people who are coming from the in-house operations, the companies that are still insourced, and the already outsourced but haven't fully outsourced all their supply chain as of yet. And that's just the organic growth opportunity, let alone the inorganic growth opportunity from natural consolidation as this very fragmented market, as we can talk about, begins to consolidate.
My background, I've got a fair amount of 4PL and 3PL, and my level of interest and fascination is really significant here. And it seems from a positioning standpoint, you talked about the TAM, and that while there's 130 billion here and 300 billion there, this post-pandemic need for supply chains to be more reliable just begs for there to be more outsourcing, looking to best practices, finding ways to eliminate the challenges that we had during the pandemic. So that the TAM's out there, but it also seems as if the momentum must be significant.
So there's a couple of things to be aware of. In regards to your e-commerce point, let's just think about it from an industry perspective. What's actually happening in the background? In the past, if you go back to the old days, the old Dickensian warehouse model, 5 to 10% of items that you bought in store, so pre-e-commerce, would be returned. That's the old world, 5 to 10%. Today, in the world of e-com, you have around 30% of your items being returned. So what's happened here, to your point of complexity, is the customer is seeing more and more complexity in its working capital. And this therefore requires the customer to seek help, a third-party logistics provider. It's a working capital problem if 1 in 3 items are beginning to be returned. To emphasize that point even further, to sort of put more color on your point about complication that our customers are experiencing, e-commerce has clearly made life more complicated for our customers. In the old world, tangible example, 1,000 t-shirts would arrive on a pallet and come to your warehouse. So one of our many warehouses, 1,000 t-shirts arriving on a pallet, and 2 pallets would leave, one to one store, one to another. In the new world, what happens is that 1,000 t-shirts arrive, and rather than the 2 pallets going out, what happens is that 1,000 separate cardboard boxes then leave the warehouse. That requires an awful lot of complexity. It requires automation, and it requires an understanding of how to manage the background to something that has become intensely more complicated over the last 20 years. The 3PLs of this market have a place, and they provide customer solutions. And in essence, what you've seen from this analogy that I gave you in regards to 1,000 versus 2 and 1,000 versus 1,000 is that the demand for warehouse space has gone up 3 to 10x across different countries. And that's where we step in.
As you think about that warehouse space requirement, how far ahead are the provision, are those warehouses, those boxes globally, and are the investments going in there? And that's really, I guess, where the question comes. The investments that need to be made, that a GXO has the balance sheet and the kind of capabilities to do, are really what's required to be able to get to fulfilling those needs that are going to be out there from a sheer space standpoint. Am I right?
We could always go through different parts of the cycle and point towards warehouse price increases, but what you're actually describing in what seems to be a problem is actually the reason why our customers need us. Availability of real estate goes through different cycles, and at the moment it's clearly a challenge. The industry has seen vacancy rates, as you know, falling to single digits in Europe. However, a degree of what you're highlighting is exactly the demand that's required for our services. Not only does it point towards increased usage of warehousing and logistics capabilities, but given the scale that we have and the partnerships that we have with different real estate providers, we can provide that turnkey solution to you with scale. That's my point. My point is that we provide the solution.
Let me ask you to look a little bit in the crystal ball. I know there's some exciting near-term opportunities as GXO spins out and establishes itself, but XPO touches on so many markets. I've had the pleasure of having Brad and others of the management team and others here at FreightWaves have had management team members talk about all of the different places that you touch. But as you think about how the global economy is moving and how the post-pandemic opportunities are there, just look in that crystal ball a little bit, and you've talked about organic growth, maybe some non-organic growth. Talk about what you expect for GXO over the next 3-5 year time horizon.
I think what's going to happen over the next 5 years, both at the industry level, which you've mentioned, George, and also at the GXO level, which your question addresses, is that there's really a flywheel effect taking place here in this industry right now. And it goes away from the idea of price and the idea that this industry is a commodity, and instead that the conversation moves to a far higher ground. That higher ground involves a company that has scale, a company that is global, a company that has a good balance sheet, and a company that is technologically advanced. What's happening is through this shift to e-com. E-com is obviously global, and therefore the companies that play in that sphere need to be global too. And what's happening at the contract table is that it's echoing that point. Effectively, what you're seeing is that customers are asking for best-in-class service. They're asking for a company that can provide them with robotics, with good-to-persons vehicles. They're asking for counterparty. Our top 20 customers have been with us on average for 15 years, i.e. balance sheet. They're asking for a company that can stack a warehouse, not just in Leicester, but also in Indiana at short notice. Requires a company to be global. And all of those things combined, if you take the complexity points that I mentioned in regards to reverse logistics, you require point on scale. And bringing all those things together, it's a rarity. And that's what I think you're going to see. You're going to see this industry gravitate towards the few rather than the many. What I mean by that is that the big will effectively get bigger. That's where I see this industry going over the next few years. With all the secular tailwinds and with all the growth that exists, I think you're going to see a consolidation at the contract bidding table. And I think that what you'll see is that the top three will ultimately take a significant amount market share over the coming years.
As you see that play out, and you talk about that consolidation happening and potentially the top three, walk me through that customer experience. And again, we're talking on FreightWaves Supply Chain Spotlight. So spotlight on my supply chain. My supply chain challenged me during the pandemic. Now I've got larger providers that have a litany of those services that are being provided. It sounds to me like that always sought after, truly end-to-end supply chain with visibility that goes inside the warehouse with the movement to the delivery. That sounds like it's something that GXO can and will be able to deliver.
I couldn't agree more. Dedicated warehouse solutions in the right markets at the right time. And some of the problems that you're highlighting, along with the issue that you raised in regards to warehouse and real estate prices, the reality is that you have to ask yourself, before you ask where we're going, you have to ask how we got here. And that there are so many problems in the supply chain right now that call for a white knight to come and save the day. The most prevalent issue, I think, is really the shortages of containers that exist in the market right now. And you'll know as well, imports have obviously been rising, exports have obviously been falling. And that has driven consumer buying pattern changes, in essence. So what you've seen is that the consumer buying pattern changes have driven those shortages across the supply chain. So the system is effectively jammed from arm to arm, as you know. What changes is twofold. One, you have solution providers like us. But ultimately, what you also need to see is you need to see some alleviation in the system as well across the entire supply chain. And I think that will come over the next 6 to 12 months. Clearly, buying patterns will normalize at some point. That's the first issue. When will consumers return to pre-pandemic buying patterns? When was the last time you went to the cinema, for example? This is ultimately a world where things are being bought online more so than they ever have been. And then the other thing I would say is when do you believe that we're going to see flying patterns come back to normality as well? Half of the world's available cargo capacity flies in the belly of passenger planes. And clearly, if there's no passenger planes being flown, that's what's caused air freight rates to spike and ultimately driven by supply shortages. So when will airline passengers start flying long haul again is clearly an important point. So those are the problems and the potential macro solutions. Where do we step in? Well, it's obvious, really. We are in the right place at the right time, a company offering global blue chip customers a automated, diverse, and geographically expansive product. And to us and to our customers, the way we do it, the way we tailor these customer contracts really is so solution-led. I mean, it can be anything from the duration of a contract through to the provision of robotics, through to an ESG focus. With our skill set and with our scale, we can provide all things to all people. And that's why there's this gravitation towards the big and the great, in my view.
I'm really intrigued that you just spoke about where I was going to take this, because we don't talk about a supply chain without an ESG element. And the challenge oftentimes, though, is I'll find that provider who checks my ESG box, but has a shortcoming or two or three or more in the other areas that I need, whether they be domestic trans or visibility or the like. And that, I think, is so critical, that the comprehensive solution, global comprehensive solution, to your point about the three providers, is really where this in all likelihood is going to take place. And I think the question is going to be, what kind of pace will that be? And I really expect, and I'm interested in your thoughts, the market will demand this, and hence the reason GXO is being spun out. But I feel it, the market is demanding that comprehensive solution.
I couldn't agree more, George. I think it's such an important point. ESG is one of our key focus areas as a company, and we're committed to and helping our customers achieve their own environmental goals. I think a good example of such leadership includes our relationship with Kering, as I'm sure you know, where the warehouse we operate in Italy has one of Europe's largest rooftop solar systems, and we save an estimated 7,500 tons of carbon dioxide per year. Simply put, if you wanted to encapsulate the Kering site, the site produces more energy than it consumes, and it's an excellent example of where a company like ours leads in the debate on net carbon neutrality. I urge you as well to attend our Investor Day tomorrow, where clearly no Investor Day would be complete without addressing some of these very important targets that we want to lay out. So that will be at 9 a.m. EST time tomorrow, our Investor Day, and we'll be discussing a variety of different visions and opportunities for this company, but obviously one of those will be our ESG targets.
Well, I'm gonna land the plane now, and just you've been there, and maybe get just a little bit inside of Mark's mind. You've been there since May. This is a remarkable company. The bringing together of these companies is of varied companies and cultures and the like, is something that Brad Jacobs has succeeded at twice previously and now again. And now this spin out, but to end the spin out with these two significant companies, what's been these first couple of months been like for you within this remarkable company and this really significant opportunity?
Let me tell you a couple of things. So you mentioned Brad a couple of times already on this call. I'm a huge Brad Jacobs fan, and what Brad is so fabulous at, and so one of so many things that he's fabulous at, is his ability to create and hire a world-class management team. What I've been so impressed with is the pedigree of people that we've come across in this firm. We've got a pedigree not just for people, but we've got a pedigree in this business for strong organic growth. We've got exceptional customer relationships. We have a CFO that is incredibly judicious with capital. Every dollar of capital that he puts in is considered, and we have thorough risk management. We tick all the boxes that I look for in any great investment. And I think we're very deserving of that high teens, low 20s multiple from an EV to EBITDA in 2022 that I think this business is rightly going to achieve at some point over the next year or so. And I think that this is, to me, I'm so happy to be here, to be honest, George. It's a great business.
Well, I want to thank you, Mark. This was a wonderful conversation. I'm so excited for Investor Day. I'm so excited post Investor Day to see what Brad Jacobs and you and the team are going to be able to deliver to the marketplace. It's something that's been talked about for so long about what would XPO be doing, and now the next step, the next generation of XPO and GXO really is something that I think the market is ready for, and I appreciate you spending your time with us today. Thanks for doing this.
George, I'm so grateful for having you on. Thank you so much for your time, sir.
Thanks a bunch. So thanks for watching the Supply Chain Spotlight. Again, I'm George Abernathy, the proud president of FreightWaves. That was Mark Manduca, the chief investment officer at the soon-to-be GXO Logistics. Looking forward to it. Thanks, everyone. Have a great day.